consumer prices, when people actually go to the store to buy goods. So that unexpectedly went up in February. And now we're seeing the coronavirus like a 1-2 punch. It's both a supply issue and also a demand issue. Do you think consumer prices are going to come down over the next period of weeks and months?
Oh, presumably. I mean, look, there's obviously a run on Purell and toilet paper. But generally speaking, I would assume that prices are going to come down. And of course, fuel prices are going to come down because the oil prices collapsed. I mean, it's worth remembering that the way the media operates, and it's not the fault of any individual, but the structural way the media operates as an industry is always going to maximize the sense of alarm. The more you watch the news, the more worried you're going to get about anything, really. And it's, 2 generations ago, you just basically read a newspaper and you watched half an hour of news in the evening. Now we watch it 24 hours a day and people are basically just panicking themselves. So it is worth remembering that the media we consume is going to sort of inherently push us towards being alarmed.
It's a very good point.
In terms of the markets.
So what's the antidote to that?
I
agree with your analysis. But what are we supposed to do?
Read less news. Read less news.
I was about to say the same thing.
You watch programs like this and highlight
Yahoo Finance.
Keep streaming Yahoo Finance.
Well, I want to expand on the thing that you said too, though, because you mentioned South Korea. We should highlight that. They have seen their infection rate fall for 4 consecutive days, despite being one of the worst affected countries outside of China. You can attribute that to a lot of things: increased public communication, maybe addressing that this is actually a problem, as the WHO has now declared this to be a pandemic, giving it the seriousness it deserves, as well as improved testing as well when we look at kind of how the country's been attacking this. But to Sabil's point, when we look at the underlying economy, I mean, we did see the CPI, the CPI measure increase. We're looking at inflation. This was before all of this mass hysteria that we're talking about really hit. But nonetheless, it was the fastest rise in inflation we saw since September 2008. So all the questions around this being, how strong is the underlying economy to deal with, A, the short-term jitters that we're seeing, but then also, B, if we move past this and everything's not as bad as people expect, what the economy would look like on the other side of this, especially considering the fact that the Fed issued that 50 basis point emergency cut, and could potentially, again, go all the way down to the zero interest rate policy that we saw back in the financial crisis just next week. So how do you put all that together?
Yeah, no, look, I think I was talking to actually a very successful independent money manager just the other day, and he was essentially saying, his argument, he's been buying stocks, is he said, fundamentally, the economy was in a really strong case. There was all sorts of stuff, trade deals and so on, that were still feeding through into the economy. We don't know how bad this is going to be, so of course it could always be, the Walking Dead and the zombie apocalypse. But if it isn't, you basically have an underlying strong economy. One thing that I think gets a little bit missed is people talk about all the things that get cancelled. The conferences that get cancelled or the rest of it. I live in a neighborhood that gets a lot of tourists and they go to the local restaurants. But what's going to happen, presumably, is that people will shift their dollars. People who were going to travel aren't just going to sit at home and stare at the wall. They're going to go out locally. They're going to do stuff locally. Even if there is a mass self-quarantine for a few weeks, people are not going to sit at home for the next 6 months doing nothing. So the economy will sort of shift. One thing that's worth remembering about the stock market is that there are hedge funds and speculators who are betting very heavily against the market, who are basically short selling. And one of the things I find very interesting is if you watch on big down days, and I encourage people to watch this evening, watch what happens in the last half an hour. Because when you have a big down day, particularly on a Friday when you're going into the weekend and there's potentially a lot of good news that might come out, you have a rush to cover their short positions and you have a sharp bounce at the end of the day because these guys have based big bets, basically with borrowed money, that this market's going to keep falling. They're betting on more bad news, and they have to cover their position in case suddenly, good news comes out. People say, actually, we've got a cure, and it turns out, whatever.
Or even like yesterday, where the market rallied.
Basically, any trading day now, the last 30 minutes have been pretty significant when we're thinking about all this positioning. But you talk about some of those sectors that have been hard hit: airlines, cruises, entertainment, all of those. But Sabil, when we talk about people who would not necessarily be made whole by some of those cancellations or people not going to restaurants in the short term, a lot of question marks about American workers here who might work in the services industry who might not actually be made whole.
Deutsche Bank did research and they put a number on it. They're saying that 15 million jobs could be threatened by the coronavirus outbreak. And those 15 million workers are those who are temp workers, independent contractors, and on-call workers in a bunch of different industries, from healthcare to law offices. So basically what they're saying is that when the economy slows down, those who are temp workers tend to be the first to get hit. They tend to be the first people that companies don't rehire or don't renew those contracts or don't call up. So what he was saying is that according to Deutsche Bank's research, we may possibly already be in a recession and it's not being reflected in the data. And when you look at the labor market, those 15 million people, they represent about 10% of the workforce. And when you look at January and February's jobs reports, 273,000 jobs were added during both those months. But since then, we've seen the corona outbreak spread in the United States. And when we're going to look at the jobs report that's going to come out in April for the month of March, they expect that a lot more people showed up to actually claim unemployment. So that's what they expect, and they believe that's going to be reflected in the next jobs report. Now, he was saying that it's never been done before where all of a sudden a jobs report, 15 million jobs were lost.
Yeah.
But he says that it's going to be a gradual erosion.
Yeah, and that's why those jobless claims numbers that we're going to get are going to be so important there, but also the idea that consumer confidence in the short term could take a hit, even if you don't lose your job. Wondering what could happen, especially for those workers who don't have paid sick leave, which is why we're seeing the Democrats want to push so hard for that right now.
Vance,
Right.
I am more concerned about that than necessarily the 15 million. I think the 15 million is probably a worst case scenario. It's the Department of Spreadsheets and all the rest of it. But people who are in part-time work, people who are particularly sort of economically most marginal, they're likely to be the first hit and to basically get the first layoffs or the cutbacks or we don't need you this week or whatever.
Well, they were part of that 15 million, right?
Yeah. Well, I know, but it's a
Very
question.
much so.
It's a question of how much. It's a question. I like you. I doubt we will see 15 million off the employment figures.
Nobody's hoping for that, but it just gives you a sense of the impact of the coronavirus and how it's impacting all these industries and all these cancellations and all these temp workers. They're just looking for the next opportunity to come work.
Yeah.
And if companies are pulling back, then they're going to be consequences.
Here's the thing. We were talking about 0% interest rates. The reality is long-term interest rates now, the Treasury bond rates, are so low that the federal government has enormous leeway to borrow a ton of money and put it in the hands of marginal workers, ordinary people, whatever. There is an enormous amount of fiscal stimulus as well as monetary stimulus that they can do, and people may worry about deficits, but if the bond market isn't worried about deficits, I don't see why the rest of us need to be worrying.
Yeah, and people haven't worried about deficits in a long time.
But we've seen
either,
Washington
too.
dysfunction. I mean, do you think that they can actually make it work and get us the stimulus we need now?
We're going to be talking about this,
It's going to be hard for Nancy Pelosi basically to say, I'm not going to pass a coronavirus rescue package because it might help Donald Trump in November. It's going to be very hard for that argument to
It's an American issue.
And that's why we're seeing. I mean, that's why we're seeing it's kind of stalemate right now. We'll dig into this later on in the show.
They'll get something.
People are hoping so, for sure. But Brett Aarons, thank you so much for joining us.
Great to be here.
Appreciate it. Appreciate all the insight there. Meantime, Warren Buffett, the Oracle of Omaha, is speaking out on the recent stock market volatility in an exclusive interview with Yahoo Finance's Andy Serwer. Here's what he had to say about it.
So it's March 10th, and it's the day after the stock market crashed. The Dow was down over 2,000 points. Oil cratered to $30 a barrel or so. The 10-year bond went to below 0.5%. What the heck is going on, Warren Buffett?
Well, I told you many years ago, if you stick around long enough, you'll see everything in markets. And it may have taken me to 89 years of age to throw this one into the experience. But markets, if you have to be open second by second, they react to news in a big time way. I mean, it's not like the market for real estate or farms or things of that sort. So you have to have a price, assuming, of course, we hit the circuit breaker yesterday, but. It still was. It wasn't October 19th, 1987, but it was an imitation anyway, and the combination actually of the coronavirus and what happened with oil over the weekend. I mean, that's a big 1-2 punch.
All right, there you go. You hear the Oracle of Omaha referencing Black Monday and all the fears from that, Anthony. But when we look at this, I mean, he's famous for basically coming out and saying, don't panic when other people are panicking. And that's really basically what we're dealing with here. A lot of investors very nervous about what could happen here. What are you telling people?
I'm saying the same thing. I mean, I believe a virus is the real deal, but at the same time, I'm prepared. This is not an emergency. It just happens to be an inconvenience. And I believe that I'm just going to sit still. I'm not going to touch my stocks, touch my portfolios. I'm not worried about missing on anything because I just strongly believe that if I'm prepared for anything that comes up, I have money in the reserves and an emergency account. My portfolio is looking good. I'm thinking long term, so I'm not getting scared. I'm not going to pull nothing out. I'm just going to be prepared.
Yeah, and I mean that's basically what we've been hearing from all the other investors out there as well, is making sure that you at least know where your money's at, how you're allocated, what you can do if things get a little bit worse from here, but making sure that you at least are asking yourself these questions should things accelerate as we're seeing them do so today. We're going to talk more about your advice later on in the show, but stay tuned for more coverage of our exclusive interview with Warren Buffett today on Yahoo Finance. It'll be playing throughout the trading day. Coming up, House Democrats calling President Trump's plan to waive payroll taxes to counter the economic drag of coronavirus fears a non-starter. A Georgetown tax professor will join us next to break down the billions it could cause in lost tax revenue. Wi-Fi PM is back in 2. Welcome back. With economic disruptions from the coronavirus intensifying, the Trump administration and Congress are under mounting pressure to step in and assist impacted workers and industries. And just a short time ago, House Majority Leader Steny Hoyer said the chamber is working on a coronavirus response bill that it plans to vote on tomorrow. The legislation will likely include unemployment insurance along with paid sick, family, and medical leave for impacted workers. And joining us now with reaction to that is Thomas Cook. He's a professor at Georgetown University's McDonough School of Business. And professor, and we're looking at this, the Democrats calling President Trump's proposal here to institute payroll tax relief, calling it a non-starter. So what do you think the economic impacts would be there, and why this has become the sticking point between Republicans and Democrats?
Yeah, I thought when the president made a suggestion yesterday on the Hill of lowering the existing payroll tax to zero on both employers and employees, that was such an extreme proposal without any substance behind it. Our history of lowering the payroll tax has not produced the results that you otherwise might think. The goal of stimulus is to encourage people to save, to not save, but spend their extra dollars as consumers. And the last go-around with this was 2010, 11, 12. That was not, in essence, what happened. Many people took the extra savings and decided to do just that, save it and not spend it. So as I looked at the conversation on the Hill this morning, tremendous pressure at this moment on the Democratic House to come up with a bill that will be acceptable to the Senate. So the ball is truly in the court of Speaker Pelosi and her team. And Mr. Hoyer made it very clear that in looking at a package, the reduction payroll taxes would be off the table. That being said, as I looked at the calendar, both the Senate and the House have time away scheduled in the next week or so.
Yeah, so they got to get this done quickly.
Thing, because that's exactly right. They've put pressure on themselves. Get it done, you get to go out of town. Don't get it done, you got to stay.
Well,
so
the American people definitely want to see this get fixed. That's the one thing. I mean, we definitely want to see a resolution there. But when you look at the economic impact of that payroll tax reduction, I mean, President Trump was talking about having it go away all the way up until November when the election there. So you know what his thinking is. But what kind of economic impact would actually come from something like that? Because we're talking about billions, potentially trillions of dollars in tax revenue.
We're talking devastating in terms of the federal deficit. But sometimes in Washington, D.C., no one wants to talk deficits and that impact. I think at the end of the day, this is probably not going to be for conversation now. Now, that doesn't mean to say that they couldn't have stimulus 1, 2, and 3, do this in various stages.
Sure.
What I am very concerned with today are the millions of employees around this country that work hard every single day, but when you think about it, have really no rights and no protection in the workforce. They're part-time, they're seasonal, they're independent contractors. That's the group that I'm absolutely petrified about in terms of them losing benefits and losing salary, and again, not being able to support their families and the consequences of that. The amount of tension and anxiety that atmosphere would be creating is beyond belief. This is where Congress has to step forward and say, forget this top 1%. We know there are individuals in this country that desperately need help, that need our attention. That needs to be the focus today. And if that means extending sick leave rights, medical leave rights, expanding unemployment benefits, that's where the concentration has to be. You know, that may not be the most rosy topic in the world to be out there campaigning, but this is not Republican, this is not Democrat, this is America. We have to leave our political affiliations aside and do what is best for the country at this time, which is clearly a crisis time.
Yeah, no, for sure.
And that was also a part of the Democrats' pushback, because Treasury Secretary Steve Mnuchin says the priority right now is to help small and mid-sized businesses. But at the same time, what about the American people who are working? So do you think Congress would actually consider a proposal, for example, where people who don't have sick leave are forced to stay at home, they would then continue to receive a paycheck?
And also, how would you fund that? What would that look like in terms of what the setup would be here?
Yeah, that's absolutely going to be the problem, because, again, that would have an impact on the economy. But by the way, here's where I think that corporations can go an awfully long way, whether you be big or small. Cut people a break. Let somebody take leave. Pool your sick leave together so we can help people that otherwise don't have those benefits. There's so much that corporations can do. Look what the airlines have done in terms of stepping forward and waiving fees. Amtrak announcing waiving fees. There's lots that companies can do that may, at the end, involve them reaching into their pockets. But let's face it, they've done very, very well under the most recent tax bill. Maybe it's time for corporations to step up to the table and show they're very honorable citizens as well.
Yeah, no, we're seeing that from some of these other major corporations as well. But I think some of the concern here is smaller businesses or maybe independent contractors as well, who really don't have anything like that could come in, like a Darden Restaurants, the Olive Garden owner, who's been saying that they'll be making their workers whole if they are indeed sick. But before we let you go, I want to ask you, too, because you are on the campus of Georgetown right now, Georgetown University, one of those colleges that is also going to be going virtual amid concerns over the coronavirus. We saw Harvard, Stanford do the same thing. What are your thoughts, and what are you seeing right now on campus when it comes to students reacting to all this, not going to classes in person anymore?
Well, the good news is that Georgetown University has had an online platform available to us in selected courses for a significant period of time. So as a faculty, we are prepared, ready, willing, and able to teach our courses either live or virtual. So we are absolutely ready to go. And I think the students' response will be not going to miss a beat. Classes will meet as scheduled. Everything will be as if we were in the classroom live. So I think very little disruption to our daily lives. And I give Georgetown, especially the business school, tremendous credit for being in the forefront, being in the leadership of how this technology can be expanded. We're very lucky to have so many talented individuals around us supporting faculty, staff, and administrators.
Yeah, and you joining us remotely seem to work just as fine as well. So Professor Thomas Cook, we'll leave it there for now. Appreciate you joining us, sir. Coming up, though, the coronavirus outbreak continuing to take center stage in the 2020 presidential race. And actually, we're going to stay here for this because I want to keep this on this side of the break before we move on. Case in point, right now, we're seeing Joe Biden's big wins in the latest round of primaries last night. The former vice president giving a victory speech of sorts from Philadelphia, but it was anything but a typical festive crowd and mood, with Biden far removed from virtually anyone else except for his wife, Jill Biden, who stood by his side. Biden's campaign now says he will deliver an address on the coronavirus from Florida tomorrow ahead of the state's primary on March 17th. But guys, of course, it was another one of those nights for Bernie Sanders where it looks less and less likely that he's going to be able to do anything to take this away from Joe Biden the way it stands right now. Of course, he's got the debate coming up on Sunday, but even that debate won't have anyone in the audience. It's just going to be the moderator and them two on stage. So not a lot to work with there.
Yeah, at this point, it's Biden's race to lose. But it really speaks to the feelings and emotions of Americans right now. There's so much misinformation about the coronavirus outbreak. Many voters want someone who's steady, truthful, and has the experience. Yes. And what we're seeing right now in the Democratic Party, what they're offering up is Joe Biden and Bernie Sanders. The others are no longer in the race. So Biden is the one who actually checks all those boxes. Bernie Sanders, what he's advocating for is a revolution. We're all rattled right now. We don't necessarily want something that's going to disrupt the U.S. economy or disrupt capitalism or bring in democratic socialism. There's a lot going on right now, and what we're seeing the Democratic voters pick is someone steady, someone who has the experience. We know Biden was with President Obama, his VP, for 8 years. We know he knows his way around the White House, and it looks like that's what Democrats want right now.
Yeah, that's kind of the irony of all this too, though, right, Anthony? Because we're talking about family or paid sick leave. That would be a progressive agenda item. We're seeing the Democrats push for it right now. Ironically, coronavirus might be the thing that actually gets what American workers have been asking for, what Bernie Sanders has been pushing for in all this. So despite the fact that you are seeing a lot of voters kind of edge towards Biden, we're seeing that in poll after poll when we think about his handling of the economy. They do favor him on that, especially older voters. But when you look at some of these policies that are coming through, it does sound like it would be something that a Bernie Sanders would be proposing.
Man, you know, I really want to say too much about Bernie Sanders because I have some thoughts about it myself, but I just really believe that I agree with what she was saying. Is that we need someone that's trustworthy, who can prove it, who can be consistent. And just Bernie's just not showing that. If we go all the way back down to his college proposal ideas, not a huge fan of that. And so I'm looking forward to seeing what happens this Saturday with no one in the audience. Hopefully he'll be there, and we'll learn more about what him and Biden are going after. Yeah, and I mean, today it was interesting because he called for a press conference. He didn't give a speech last night after the election results that we got, primary results, I should say. He did not address media or the crowds out there, but